What's going on, guys? Line Trader here, and I wanted to talk to y'all a little bit about finding divergence and how can you find a little bit more confluence, or, in my opinion, how to properly identify divergence. Um, in my opinion, I feel like a lot of people are only seeing a small piece or only part of the equation when looking at divergence. Um, because a lot of people will refer to the RSI indicator as a momentum indicator, which in my opinion is incorrect. What I believe is this is actually a velocity indicator. Uh, and the reason I think that is because if you take a look here, you see this massive spike up, right? Well, what the RSI is doing is it's taking the average gain divided by the average loss. And so what's happening here is as you're seeing this massive spike, this massive increase in velocity as the price rises, and then you're not seeing the follow through with the same amount of velocity. So what this is really telling you is that you are losing velocity in the price action. Now, what would it mean for it to be an actual momentum indicator? Well, a lot of times we find that we can apply the laws of physics to the actual markets. So if you take a look here at the formula for momentum, it's going to be mass times velocity. Now, if the RSI indicator is going to be the velocity, how fast the price action is accelerating or moving, what is mass? Well, mass is going to refer to the amount of volume that is accelerating. So in order to properly identify reliable divergence, because I'm sure everyone has been in a trade where you select, oh, there's the fifth wave, we have divergence, I'm going to short. Well, hold on a second, because what's the mass doing? Is your mass decreasing with the velocity? More than likely, that's going to be your more reliable sign of divergence. And let me show you an example of this. So if we take a look here, this is on Ethereum. Just what is this? I believe that's February 18th. We're looking at the RSI right now. So we have our first sign of divergence right here. So from this point right here to right around here, we're seeing our divergence on our velocity. So our velocity is slowing down, but what is not slowing down is our mass. Our mass has not decreased yet. In fact, our mass has increased. So would this be a reliable spot to call it divergence? Not quite, because look what we did here. As we continued on, because I know a lot, I've done this a lot where I will be like, okay, there's some divergence, end of, let's say, a fifth wave or whatnot. I'm going to go ahead and take a short here. As we start to come down, I put my stop at the high, and then lo and behold, I get stopped out, and I just cost myself a stop. Well, if you would have done that here, you would have been stopped out. So look at this. It continued. But now that we're seeing divergence on the mass, now look what happens. It comes down. Granted, this was a fourth wave and not a fifth, but you get the point that I'm trying to illustrate here is that once you start seeing divergence on your RSI, you want to verify it by seeing a reduction in the amount of mass being traded on the asset. But yeah, that's it. I just figured this would be easier for me to explain this little trick I learned through a video instead of having to type it all out. Anyway, have a good day.